Hey everyone, Stock Ninja here, bringing you episode 2 of M&A. In this episode, we are going to look at Uber's acquisition of Postmates. Stick around to hear all the details. Not too long ago, Uber was in talks of buying Grubhub, but that deal has since fallen through. Then on the week of July 1st, 2020, we heard rumblings that Uber was in talks with Postmates to buy them out for $2.6 billion, and this rumor was later confirmed very late on Sunday, July 5th, 2020. Uber, as many people might already know, is a ride-sharing company that offers peer-to-peer ride-sharing, ride service hailing, food delivery through their Uber Eats division, and micro-mobility system with electric bikes and scooters. Based in San Francisco, California, with approximately 22,263 employees worldwide, Uber is a technology company which trades with the ticker symbol UBER in the Russell 1000 index. On the other end of the deal, we have Postmates, which offers local delivery of restaurant-prepared meals and other goods directly to consumers. Also based in San Francisco, California, Postmates is a privately held company with around 5,341 employees and currently operates in 2,940 cities across the United States. With Uber set to spend $2.65 billion to buy Postmates, a big question for many people, including myself, is how is this being financed? Let's take a quick glance at Uber's balance sheet before we look into the finer details. Looking at the numbers as of March 31st, 2020, we can see that Uber has around $9 billion in liquid assets, with around $6.6 billion in current liabilities. So theoretically, they can almost foot the bill outright for Postmates in an all-cash deal, but instead, they're going a different but more conservative route, especially given how important a cash cushion is in 2020. Uber will be acquiring Postmates in an all-stock deal. What that means is that Uber will be issuing more shares, in this case 84 million common stock, which represents about 4.8% of all outstanding shares for 100% of Postmates equity. Essentially, if you are a current shareholder of Uber, your shares will be worth 4.8% less when the deal is finalized and the new shares are issued to Postmates' current shareholders. Leave a comment below with your thoughts on the all-stock deal. Due to the situation in 2020, Uber reported a $2.9 billion loss for its first 3 months of the year, but the Uber Eats division rose 53%, with booking through Uber Eats doubling from April to June 2020 compared to the prior year. So from this, we can assess that one of the biggest reasons Uber is buying Postmates is to diversify its business further and expand its Uber Eats and/or food delivery segments. This will make Uber the second largest in terms of market share at around 37%, trailing DoorDash's 45% of overall market share, with Grubhub coming in at 17%. With the food delivery service sector set to expand into more than a $350 billion industry by 2030, there is a lot of growth to be had in that space. It makes sense for Uber to acquire as much market share as possible, especially when Postmates was filing to go public at some point this year. When looking at the food delivery space across the major cities in the country, we can see that Uber is actually right behind DoorDash, but with this acquisition, it will allow them to dominate market share in Los Angeles, further consolidate their dominance in Miami, and even the playing field in Phoenix. Uber's main competitor in the ride-sharing space is Lyft, but just recently in April, Lyft began to wade into the meal and grocery delivery space. Lyft, along with their partner Support, launched their new program in select cities, but could expand to more cities if the company finds additional partners. It is quite possible that these actions by Lyft sped up Uber's acquisition of Postmates. In the food delivery space, Uber's largest competitors are DoorDash and Grubhub. We already know that Uber went after Grubhub, but the deal fell through in the wake of antitrust regulatory sentiment and potential breakup fees due to a failure to merge. Instead, Grubhub was acquired by Just Eat Takeaway, a Dutch food delivery company, for $7.3 billion. Though DoorDash currently leads all competitors with the majority of the market share, with the Postmates acquisition, Uber has further consolidated second place and will narrow the gap. With everything that happened thus far in 2020 resulting in Uber seeing a massive drop in its share price over the course of the year, clearly had management concern in terms of business diversification. Though the attempt to grab Grubhub ultimately failed, Uber's persistence paid off, with the Postmates acquisition being the next best thing, essentially changing the landscape from 4 companies dominating the food delivery space to just 3. Ultimately, Uber wants to be a net positive company, but faces stiff competition in this space. With paper-thin margins and all the players vying for partnerships with restaurants, it is possible that Uber might never turn its food delivery segment into a moneymaker, even after combining with Postmates. One of the concerning aspects of this deal is that Postmates itself has also been losing money. Ultimately though, the shareholders have the last say on this move, and the day after the news broke on July 5th, 2020, share prices gained almost 6%. It seems that Wall Street clearly approves of this deal. The deal is set to complete in Q1 of 2021. Uber plans to keep the app separate and incorporate their driver base into the Postmates app. If you are a shareholder or looking to become one, bear in mind that the integration is a long process and will take some time to really start showing concrete results. That concludes our analysis of the M&A between Uber and Postmates. If you made it this far, please don't forget to subscribe and like the video. Till next time, Stock Ninja out. I am not a financial advisor, and this video is for educational purposes only. Please do your own research before buying or selling any stock seen in this video.